Last Thursday and Friday, we have around -5 to -10% corrections. And then do you think it's furthermore down or it may be going up again? So my thinking is just a small correction or regular correction, and then this is a good time to buy low. And but not not tomorrow buy. You need the watching, and then when you see the bottom and then go back again, that's the time to buy low. This chart is showing S&P 500 stocks over 20-day average. So here the 47 means the 47 stocks over 20-day average. And then this is the September 4th, the Friday. S&P 500, the red line is showing. It shows S&P 500 index. So it closed on Friday 3,400, and when it was a high was the 3,500. So it's about more than 100 points down on Thursday and Friday. And this, when you see this chart, when number of the stocks above 20-day average going down, and we can expect the index going down in soon. So it's like June, the stock S&P 500 was 3,200, and then it was down to the around 3,000. So it's about 200 point down. So in this time also I guess it's gonna be about 200 down possible. So it's about 100 down more. It could be possible in the coming next week. So the kind of we can expect things from this chart, and we see it now the fundamentals. It is really for the the economic crisis or just regular crisis we have the 2-3 times regular years. So to see that it is a regular one or the big correction, so we can see the start from dollar index. Dollar index, as you see, the between 92 to 94, it kind of is stable. So which means dollar index is stable. The other one is 10 years treasury bond yield is around the 0.6 to between 0.7. So which means the 10-year US treasury bond rate also in the stable band. So which means it's not a big issue. It's kind of more close to the regular correction this time. And here is the one of the safe haven is gold. So gold price is keep trying to the low bottom of 1900 around. So after this condition is over, then I think it's going shooting up again. So let's see what the experts say about this condition. So they said here, okay, the CNBC, so September 4th, the article says, well, even though it's a little bit come back on Friday, but it's a little bit more correction possible here. And so in the coming weeks, we're gonna more choppy index move. And so especially in Nasdaq, they still feel a little more frothy. Okay, and inflation rate is coming this week, so let's go down. As you see, the inflation forecast is we expecting 0.2, so it's year by year year over year. 1.6 gonna be up, so which means the very stable or more close like now the people said disinflation. Okay, so we're going down more, talking about JP Morgan Chase here, and they said as I told you, the stock market gonna be choppy in coming a few weeks, and in case the S&P 500 rate going down to around 3,000, which means 200-day moving average. It's about 200 down, more than I expected, but we'll see. So in this condition, I think it's not the big things. And then well, nobody knows, but I guess because this who sell off these stocks, in my opinion, in US 20% of stock investors are retail investor, and then rest of them, which means 80% of stock investors are hedge fund, so in this time I thinking more hedge fund managers, they sell off to realize the gain this year, because after this time in August we got lots of gain, we had a very good market. That's why they want to, especially the stock hedge fund managers, they want to realize gain to confirm their bonus. That's just my guess. And because September, October, after that we have presidential election in November, which means the uncertainty is there, so the market doesn't like, so we cannot assure that we're gonna have more gain in those 2 months. And after election, probably we have more uncertainty, because whoever gonna be the president, they're gonna changing the policy, so that's gonna be another uncertainty to the market. So market doesn't like uncertainty. That's why the hedge fund managers, they realize the gain this time, and then when the stock market going down, and then I think they're gonna try. They plan to buy low again. So in this, my guess, I made a plan. So I sold before this is coming. I already sold some of my stakes, and then I made a cash, and I bought some of them, and then in the coming week, when they're going down further, the market going down further, I'm gonna buy more little by little. Okay, so I'm gonna show you some of the my stocks in portfolios. So the what I sold is JNK. It's a Barclay high yield bond, so it's a junk bond. So as you see the 1 year chart, and this is the bottom line of in March, so it's going up, but it's almost going up to the previous high point. So it's I think it's a good time to sell, and then move to the growth stocks. So I sold it. And then another thing is here VLP, which is the preferred ETF. It's like the JNK. It has a good dividends. That's why I had, and looks like the same as like before. So those bond stocks or preferred ETF, the kind of bond, right? So those are good for the income investors, or in case the recession is gonna expected to be longer, then I think that's the good the investment for the junk bond or preferred bond. So but it's this time we recovered so fast, and even though the COVID-19 infection numbers going up, but the economy kind of stabilized, and then somehow it figured out to recover. So I think in this one is going up, the little bit space to the here, so it's moving to the growth mark stocks is gonna be more. I think it's more smart. So I sold them, and next thing is the silver. Recently go up a lot, and then around the $25 price range, it making band, and they keep trying to the making bottom now. So I think the silver and gold are going up, but in my case I keep the gold and then I sold the silver, and because it's more volatile. So I'm going also, this one is better to switching to growth stocks, so I sold that. And next thing is the VGLT, is the long-term treasury bond, and as I show you, let me see here. Yeah, the 10-year treasury bond is kind of stable, which means when the treasury bond interest rate going down, the bond price go up. But this kind of way, it going to the sideway, which means not much merit in bond. So it's good for the monthly dividend, but in the price wise, not much growth here. So I sold it here. I mean the VGLT. I sold it, and then made the cash. And I tried to here. Next one is NIH, is National Healthy Investors. The dividends is about 6%, and recently it's from the bottom in the March, it going up slowly. I think it if you like income, if you like income investment, I think this is a good stock for you, because the 6% dividend, and it growing. I mean the price going up. I think more than the $80 line, now just $63, and later on the baby boomers more retired, which means the national health investors, a rich company for the senior house and clinics, so which means that their business also booming. So I think that's also kind of growth dividend stock, but I want more growth side, so I sold it. And after I sold it, I moved to the these stocks. I bought some of them, but I want to try. I plan to buy more. Okay, so one of them is the ARC next generation internet ETF. So it's going down, and then see I show you the 1 year chart first here. So 1 year chart here, from the March, it go shooting up a lot, and recently it has corrections, but that correction looks big here. But when I see the 1 month chart here, looks like almost the like it returned the 1 month gain back. So it's not big deal when you see when you're holding the 1 or 2 years in this ETF. I think it's not big deal. So it's I choose this ETF, but I'm not gonna buy tomorrow kind of way, because it's gonna be a little bit have a correction 2 to 6 weeks. So I'm gonna watching, and then when it looks like it making the bottom and then try to go up, at that time I'm gonna buy a little by a little more. Okay, and then when you see it here, in case when you invest to $10,000 in 2015, and then today you're gonna have it gonna be the 60,000. So it's just 6 times growth. That's a big growth, right? And that's the top 10 holdings. And then here the Tesla. So I think because of Tesla, it's more fluctuate, but So in the case you don't like the ETF, or maybe you can consider Square, Facebook, and Zillow kind of things. And most of them is just like large cap growth stocks. And the next thing I'm interested in is the iHack, is the iShare Cybersecurity and Tech ETF. So in fifth generation, so 5G and fourth industrial revolution, I think in the cybersecurity industry is the beneficial area sectors. So I think it growing slow now, but I think from next year and the coming years it's growing faster and a lot, shooting high. So that's I think. And then it's also the iHack also just to return back the their gain in the last 4 weeks. So it's when you see the long-term invest, it's not so big deal. So as I said, it's kind of regular correction here. And then okay, top 10s here. So one of them is the Dr. Sign and Northern Life, Okta. I think those are the kind of the everybody knows. So if you want to, if you are interested in the individual stocks, maybe you can see one of them. And there's a medium cap growth stocks, and then like the ARK ETF. The other one is what I'm interested in is the ARKK. Also, I'm interested in, and then the other one is the MGK. So you can look it up them. Okay, let's recap. So I think it is the this is just correction to the big gain in August because of the uncertainty prior to the presidential election, and then realized the gain by hedge fund managers. And then this time the Fed said the AIT, which means the averaging inflation target, as I show you through the CMVs. The inflation rate is very stable or low. So we say disinflation, which means the Fed are gonna keep their federal interest gonna be low for a long time. And then jobless rate is another their target. Their target is 5%. Now this need about around 8%, 9%. So until we're gonna see the jobless rate to the 5%, we kind of enjoy close to the 0% Fed interest. So until that time, is the growth stock is more benefit from that. So before the Fed was an inflation fighter, but now it's a deflation fighter. So that make a big difference. And my investing plan is so that's why I choose a more growth side than the value side. So I sold those of the tickers, stocks, and bonds, and then I bought those things, and then I'm gonna buy more them. So it's someone like the ETF, that's a good suggestions. And if you don't like ETF, then you can go to see the ETF is and check their top 10s, and then you can find one of them. I think that's a good idea for the next coming 1 or 2 years until the Fed increase the interest again. Love once more, thank you twice.